It absolutely blows my mind that trading and investing are used interchangeably. In daily conversations, I come across people all the time who, when they think of investing and trading in their mind, they're thinking about the same thing. But in all reality, and from an investment point of view, investing and trading could not be more different. If you're new here, my name is Soho Fini. I'm a certified financial planner, and my goal today is to help you understand the differences between trading and investing, what is involved with each of them, and help you figure out which one might make the most sense for you. Goes without saying, anything we talk about here today is for education and entertainment purposes. My goal is to give you something new to think about. Let's dive into them. Investing versus trading. Let's talk about what they have in common. The stock market. And I think that's where the similarities end. See, investors and traders both use the stock market as their primary instrument of wealth creation, but they use it with entirely different approaches. On every other category, they're completely different. Let's talk about the overarching strategies here, and then we'll get to the details. Investors are interested in acquiring good quality assets that can grow and be profitable over a long period of time. They're interested in compounded returns. They're interested in dividends. They're interested potentially in an exit, which would involve a company selling or getting acquired by a larger company, and they would benefit from the money they've parked there for a long period of time. On the other hand, traders have no interest in the long-term prospects of the company, and they're purely interested in the short-term price changes of an asset, typically in the course of the day, hence the term day trading. So as you can see, we're talking about two entirely different approaches when it comes to making money in the stock market. Okay, now let's talk about certain qualities that are involved with each of them. From a time horizon standpoint, investors have multi-year, in all reality, decade-long time horizons here. See, investing requires compounding. Compounding is a byproduct of time, exclusively a byproduct of time. So in the absence of time in the market, I cannot experience compounding growth. That just simply is not possible. On the other hand, as a day trader, I actually don't want to hold on to the assets for a long period of time. I'm looking to make a quick profit by being right about the price changes. Meaning if I'm going to put a bet, the price is going to go down, I need the price to go down very soon. And if I'm going to put a bet that the price is going to go up, I need that to happen also very, very quickly. Strategically, investors are looking to build a portfolio of diversified assets and keep those for a long period of time. In fact, they want to avoid going in and out of the market as much as possible to avoid taxable events and transaction costs. Day traders have no interest in the long-term performance. They're holding on to those assets for a matter of minutes, hours, but certainly less than a day, and they want to exit the position. Day traders need their capital to work with every single day, while investors need their capital to work for them every single day. Two very different approaches. Day traders need to work with their money. Investors need their money to work for them. From an analysis standpoint, these groups use entirely different set of data points to make their decisions because they're making very different types of decisions. Day traders rely primarily on technical analysis, which uses charts and indicators, kind of similar to what you see behind me here, to predict short-term price movements, while when it comes to investing, we rely on fundamental analysis, which evaluates a company's financial health and long-term growth prospects. Let's talk about time commitment here. Okay, and this is a big one. You're bombarded today with ads and financial gurus that tell you just spend 15 to 20 minutes a day and become a day trading master. In all reality, while maybe you could do day trading as a side hustle, if you are going to be day trading as a full-time job, it genuinely is a full-time job, and you have to interact with the market, data points, statistics on a continuous basis. Investing, on the other hand, requires you to spend some time in the beginning to develop an investment strategy, whether you're doing this on your own or with the work of a wealth advisor. And then after that, you don't actually interact with the account on a daily basis. In fact, if you consider yourself an investor and you're going in and out of the market on a daily basis, or you're even monitoring your assets on a daily basis, you should stop doing that. Investors are interested in long-term growth, meaning the short-term changes in the price of the assets that you hold should make no difference in how you're going to approach those assets. Of course, when it comes to risk, looking at two very different conversations here. See, long-term investors are able to mitigate the challenge of risk, especially short-term risk, by simply ignoring short-term market volatility. Okay, long-term investors makes no difference for them if the market drops 15 or 20% today because they're not utilizing those assets. Think of it this way. Let's say you're going on a trip to Italy, and this trip's scheduled for 2 years from now, and they get bad weather in Italy next week. You're not canceling your trip to Italy. You're not even going on that trip for another 2 years. So who cares if they have bad weather next week? That's how investors should be thinking about short-term fluctuations in the market with our long-term investing. Day traders, on the other hand, are taking way more risk on a daily basis. Let's talk about the statistics here. There are various data points out there, but most of them suggest that less than 1% of day traders are consistently profitable. Less than 1%. That means 99% of day traders, even the superbly knowledgeable ones, have to lose money on a very frequented basis. So the risk is substantially higher. On the other hand, as an investor, if you're invested in broad market indexes, let's say the US large cap market, over the past 100 years, there's never been a 15-year period of investing where you have lost any money. Now, in the short term, 1 year of investing or 5-year investing, there has been a period of time where you have actually lost money. But if you remained invested, didn't jump in and out of the market, and remained invested for a 15-year period of time, you would have been profitable 100% of the time. I'm going to talk about this a little more at the end of the video, the conversion between probability and possibility to help you decide which one makes the most sense for you. From a cost standpoint, I think today, with the emergence of online trading platforms, there's been a democratization in mitigating or reducing the cost of investing and brokerage fees more than ever in the past. Historically, day trading or trading used to be an extremely costly activity because you had a lot of transaction cost. But today, a lot of retail investors in particular are able to bypass a lot of those costs or reduce those costs by using little to no cost platforms when it comes to day trading and investing. But the cost is not just only transaction cost. The cost of taxation is the hardest one, frankly, one that's impossible to avoid here. See, long-term investors, at least for US-based investors, are able to benefit from much better tax rate when it comes to long-term capital gains, which are investments held for longer than 1 year, while day trading profits are taxed as your ordinary tax rates. So that ongoing cost of taxation is eating away into your profit every single time. And last but not least, the amount of money to get started. And similar to transaction costs, I think today there's been a massive democratization in what is available to investors. Meaning I can really start investing with $50, a month, or I can really trade some stocks with $50. But here's where they're different. As an investor, you're able to put some money into the market and just let it slowly grow over time. But as a day trader, because you're going to encounter a lot of losing position, again, remember, less than 1% are consistently profitable. You need to continuously feed the machine because you're going to have a lot of losses before you get some wins, even when you know what you're doing. So we're talking about much deeper pockets, financially speaking. I also want to highlight one final, extremely important risk when it comes to day trading, and I see this all the time. Day trading to a large degree resembles gambling. Anyone who has a gambling tendency, a gambling type personality, if you have an addictive type personality, if you have any sort of biases that might give you illusions of grandeur, they're very, very likely to come out when it comes to day trading. And all of a sudden, you're not even investing, you're playing games in the stock market. What a shame. What a loss of opportunity. Now, if you heard all of this and you still are not sure which one makes the most sense for you, I personally am under the firm belief that most people, vast majority of people, are better off being long-term investors. I interact with clients all the time, very successful, well-resourced clients who many of them, despite what they think when they get started, end up losing a lot of money in day trading. So if you're trying to put the odds in your favor, you're going to choose long-term investing in well-diversified assets. But if you're looking to the possibility of making quick buck, then you're going to go the route of day trading. I hope you found this to be helpful. I hope you send this to somebody who's really unsure what they should be doing. If you found this to be insightful, helpful, something to think about, please like and subscribe. Come back starting September. We're going to switch to weekly videos. Have a great day. See you next time.